How do you file taxes for your C corporation? Hello, leaders of tomorrow, back at you with another video. And in this video, we're going to talk about how do you file taxes for a C corporation. Okay. So, guys, when it comes to the C corp, okay, this is a unique situation because there is sort of a double taxation effect that happens here. Okay. And what it does that entail? Okay. What that basically entails, guys, is that there is a tax that is applied to the actual corporation and its profits, and there is a tax filed on the individual level or applied on the individual level when you as the shareholder goes to file your tax return. Okay, guys, so this is where the double taxation comes in. The actual corporation itself gets taxed, and you as the individual gets taxed when you go to file your tax returns. Okay. um so how does that work, guys? Okay, when you have a C corporation, and usually this is for like bigger corporations, corporations that's in the multi-million dollars to billion-dollar range, because C corporations basically fit those situations better, right? Because it has a lot of shareholders. So, particularly speaking, bigger companies will switch over to C corporations to accommodate the shareholders or the number of shareholders they have. But in generally speaking, a C corporation, guys, you will file a form called the 1120S, which is behind me here. This uh, form here will is what you will apply your profits and losses of the business. Okay, so if you have a profit on the business after expenses, guys, the C corporation will have to pay taxes on this. So you will have to send the C corporation will have to send a check to the IRS based on this form here. Okay. Now, let's say the corporation has 5 shareholders, right? Whatever profits is made from the corporation, okay, part of that profits will shovel down to the shareholders. Part of the profits will stay in the corporation. Okay. So the profits that stay in the corporation are called retained earnings. The profits that get shoveled down to the shareholders are called distributions. Okay. And in those distributions, the shareholders, when they go to file their individual tax return, which is the 1040 that they will file, they will have to put those distributions in what is called the section Schedule D of the 1040. Okay, that is the capital gains part of the tax return, and depending on if they're long term or short term, will determine what taxes they have to pay on that part of the income. So again, guys, when you file an 1120 for the C corporation, the profits get taxed there. Then part of the profits gets uh, shifted to the shareholders, which is called distributions. When the shareholder goes to file their own tax returns, they will report that on the Schedule D, capital gains, which will be taxed as well. And it will be taxed on a capital gains base, whether it be long term, short term, depends on that will determine the taxes. Okay. And this is where the double taxation effect happens, guys. So again, guys, this is how you will file a C corporation tax return 1120S. Then it goes to the shareholders. They file their 1040. The the capital gains gets reported on the Schedule D. Anyway, guys, that's the video for today. If you want more tax saver tips or just tips in general taxes, please follow the channel. See you guys later.